More on the challenges facing Europe right now, what it means to the markets. We bring in Ashish Shah. He has a pretty long list of concerns when it comes to the region and says that reality has yet to set in. When it does, leaders will be forced to make tough choices. Ashish is the co-head of credit investments at AllianceBernstein, oversees $210 billion in fixed income assets. Ashish, welcome to the Inside Track. Glad to have you with us.
Thanks for having me.
George Soros says that Europe cannot deal with the failure of a major bank. But is it even realistic to think that a major bank would fail?
You know, I think one of the biggest risks that you have within Europe is that the safe assets that these banks all thought they held are actually risky. So sovereign risk, is major. Greek assets are not as safe as they thought they were, only 5 years ago.
Ashish, what is the end game here? Whether it's is a resolution authority, the kind that George Soros is talking about, really going to fix the problems in Europe? Because clearly, Mario Draghi's been talking about it. Jean-Claude Trichet's been talking about it. The end game here seems to be some kind of a political union, right? Some kind of a taxation and spending authority.
Right.
Who in Europe is going to abide the transfer of wealth from Germany to Greece on an official basis, which is effectively what a taxation authority would do?
Well, I think they have to decide whether they're better off together or on their own. And the process of going back to being on their own is going to be really messy.
Well, we even heard from the CEO of Deutsche Bank over the weekend, Josef Ackermann, actually speaking to that point, saying dissolving the European Union would actually be more costly than the individual sovereignties going out again on their own, to your point. But in the meantime, what does this mean for the markets? You oversee $210 billion in fixed income assets, part of your purview, your responsibility. What are you doing in this kind of climate?
So I think that this is an important time to be defensive. And one of the things people forgot about earlier this year was that fixed income is about defense, right? You can invest in equities, and that's where you're going to get your return. But fixed income is about safety.
Although anybody who bought treasuries might say, well, they got a pretty good return though so far this year.
Yes, they did.
If fixed income is about safety, is there any safety to be had in European credit, whether it be bank credit, whether it be corporate credit? We've seen spreads blow out there. Is there enough return to justify the risk?
So there are definitely companies that have built up significant cash hoards that are going to be solvent regardless what ends up happening. The challenge you face is that there isn't a lot of return anywhere that there's safety in this market. And you can see that when it comes to treasuries or corporates.
Ashish, what if this time it's different, right? That's a question that we often ask ourselves. And many people make the argument, even though, as Michael just pointed out, a lot of the conditions look like 2008, but maybe we have more warning this time. Maybe the situation in Europe is unraveling at a slower pace than what we saw here in the U.S. in 2008. What do you make of that argument?
So I think that's a great point. This time is going to be different. It's going to be different because some companies are going to be better prepared. But what's not different is that people forget back in 07 and 08, it took a long time before people realized how bad it was going to be.
Ashish, one of the things that people have figured out, and you're clearly right about this, and many other people have commented on it, is that we're aware of the tail risks. We don't know them all, but we know that they exist, and we aren't as willing to dismiss them as people were, say, heading up to September of 2008. So specifically, in the money that you oversee, how are you prepared for these tail risks? Have you gone out and bought insurance? And if so, are you willing to pay that price? It's going to come out of your returns.
So I think across our portfolios, we're trying to be defensive where we can, and that varies based on the type of service we're using. In some cases, we use tail risk management, which is something that I think has become very popular post-08, thinking about tail risk and intelligent ways of managing that downside risk. In other cases, we're just dialing back risk, making sure that whatever happens, that our clients' money is going to be safeguarded.
But you're afraid.
We are definitely defensive.
To Eric's point, and you're willing to pay a premium, you're willing to have that come out of your returns because you are fearful. What's the worst case scenario in your mind?
Look, the worst case scenario is that you get to a point where you're questioning whether the Eurozone stays together under a common currency.
And you feel like there is a significant risk that that doesn't happen.
That's going to be a tail risk, right? Because no one wants that to happen, but you can certainly see that risk get priced into the market. And that's why you need to be defensive.
Ashish, does it matter any longer what the European leaders say? It's clear that the tail is wagging the dog in Germany. It's the German voters who are effectively in control of the political agenda increasingly. And you can only imagine Germany isn't going to be the only country where that happens. How much do you have to price in voter psychology now and going forward?
Well, so I think you're hitting upon something which is important. You can't focus on where the puck is. You need to focus on where the puck is going. And the real issue here is that these countries aren't growing enough to grow into their debt, and they have all issued in a currency that isn't their own. Those things gotta get solved here. And until they are, we're going to be in this period of time when it's really hairy.
Ashish?
We hope you come back. Ashish Shah, co-head of global credit at AllianceBernstein.